Welcome to the another video on microfinance learning. I am Jay Dhanavade and I will be explaining you the different channels of microfinance. So without any ado, let's begin. As we understood the concept of microfinance, that how it plays a crucial role in empowering the low income groups. So in this video, we will be going through the different channels through which the financial services are being delivered. So here we can see the 5 major channels of microfinance. And for better understanding, I have divided the each channels in the following parts. That is, we will understand the structure, the key features, the advantages, disadvantages, and the target group or the examples. So you have to stay with me, and soon now we will be going to begin the first one, that is the self-help group. So this is the most well-known and widely adopted approach, that is the SSG bank, in short, linkage model. So this group is a 10 to 20 people, which is mostly a woman, who saves a small money regularly. Like each member is saving a small money regularly, and then they create a common fund and they give small loans to each other. Later, after a few months, the bank they link their group with the bank, and then with this bank linkage, the banks are giving them the loan. So here, hence we call it as a self-help group bank linkage model. So moving on to the structure. So we can see, if we follow the structure, there are 10 to 20 members. People from the same village or the same area forms a group. They do regular savings. Their internal lending, they do internal lending within the groups. Then with the trust, bank opens the SSG self-help group account, and then bank gives loan to self-help group. And this self-help group distributes loan to the members. Moving towards the features. So we can see the group, this is a group based lending. So there is a no collateral. And since there is a group, there is a peer pressure. So this ensures the repayment timely. And here is a rule that saving first, then loan. That means we will save first, and based on that, they will give the loan. Then this is mostly a woman centric. Moving to the advantages. So it's easy access to the credit for the members. This develops a saving habit. This empowers the rural women. It has a very low default rate. Okay, and this promotes a financial inclusion. Moving to the disadvantages. So since this is a very small group, 10 to 20, as I said, the loan size is also very small, since the women are from the low income groups. So they save very small amount of money. So if we see, there is another aspect, that there might be a conflict in the group, or for the repayment. Since the group is small, the scale is also small, and it also depends on the group. As I said, everyone has to follow as a team, and there has to be maintain a group discipline. So the prime example I would like to say, the NABARD. So this plays a leading role as a SSG bank, connecting with thousands of rural women to formal the credit. Then there comes a microfinance institution. So this is an intermediary between the banks and the rural people. So this organization provides small loans to low income people who cannot access banks. Like the accessibility of the bank is not in that area. So this act as a so MFIs act as some financial intermediaries. They go to each areas, and in everyone's house, and they provide help. Moving further. So we can see the features of the MFIs. That is, they can raise funds from the banks and investors. They can lend directly to the borrowers. Repayment is normally weekly or monthly, and often it's used as a joint liability groups. Moving to the advantages. So since it's a small ticket loan, the repayment cycle is very short, as well as the loan disbursement is fast, and there is a high outreach, as they are spread into the rural areas, and mostly these loans are unsecured loans, that is, there is no collateral. Going to the advantages. So it's a fast loan processing, then richest poorest sections, and as I said, there is no collateral, and flexible loan usage. That means it can be used for any purpose. Coming The disadvantages, yes, they since they are intermediary, they charge the interest rate is little high, and the risk of over borrowing, as I told you, there is no collateral, plus there is no specific purpose, so borrower can buy multiple loans, so there is a risk of over borrowing, and this there is a stressful repayment cycles also, as well as operational costs are high. Moving to the examples, so yeah, we have Bandhan Microfinance, Ujjivan Small Finance. So these are some started as an NGO and now has become the largest. Bandhan actually, Bandhan was started as a NGO and now has become the largest microfinance institution. Then the another comes as bank-led microfinance. So this is directly from the bank. The banks directly provide microfinance loans. They themselves, there is no intermediary between them. So this act as another services from the banks. So moving to the structure. So the as I told you, bank individual lending, it sometimes they are supported through SSG and joint liability group. Then mostly bank staff handles the operations and it is regulated fully by the RBI. Then going to the structure format. So if you see the features, so there is a very low interest rate as compared to the MFI, since the direct bank is involved and no intermediary. There is a formal banking system, strong regulatory oversight, I can say. The advantages will be there is a cheaper loans, high credibility, and I can say there is a consumer protection since RBI regulated, and stable funding. Moving to disadvantages, so since it's a bank involved, there is too much, there will be lots of KYC process, so the approval process for this loan will be little lengthier and slow. It is less flexible, and it's a bank, it's a known proper bank, so the outreach is still limited in many rural areas. So this is one disadvantage for the bank led microfinance. So mostly public sector banks offering PSL loans. PSL is priority sector lending, which is mostly focusing on agricultural side, small farmers or low income households. Moving to NGO-led microfinance. So this NGO, it promotes self-help group. Then it's provide training and sometimes lend money and connect self-help group to the banks. So their majorly focus is on the social development and not just a profit. So this is another. Then if you see here the structure, so it's an NGO. They provide financial literacy. They are linking self-help groups. They links their groups with the banks, and they continue monitoring. Feature, yes, social objective. It's community based, and we can say they focuses on development side. Advantages here, yeah, it's a strong trust at a grassroots level, better financial awareness. There is a women empowerment also, and social upliftment. Disadvantage here we can talk that the funds are little limited as they are on the grant side. So it depends on the donations. It's not scalable. The there is operational sustainability issues also. So mostly NGOs are working in rural and tribal areas. So yeah, then the comes to the older one, that is the cooperative credit institutions. So this is member owned institutions where people pool money and lend to the members. So here borrowers are the owners. So members contribute capital, then they are elected by the management. Then the loans are given to the members, and they are often these are often sector specific. So here we can say the agricultural people, the low income group. So it contributes a small share of a capital. So at a very low interest rate, the operators are very local, and it's a democratic control. Then if we talk about advantages, so it's a member friendly, local understanding, affordable credit, as well as the strong rural presence. Coming to the disadvantages, so yes, there might be a political interference. The management might be little poor. Then there is a limited technology. The NPS might higher. The example PACS, that is Primary Agriculture and Credit Societies. Specifically for the farmers, they provide short-term loans. So this was all about. I would like to say the overall microfinance uses multiple channels, and each channels with its own strength and weaknesses in outreach, course, risk, and sustainability, and together they complement each other in reaching different segments of the low income group. So overall, these channels basically form the backbone of the microfinance system. So that's a short overview from my side. Thank you so much.